Hello, and welcome to another episode of Charmaine's Real Estate Chronicles, the podcast where we unravel the ins and outs of the housing market in the Toronto and surrounding areas to empower you with the knowledge needed for a successful real estate journey. I'm your host, Charmaine Goodridge, and I'm a trusted real estate agent with Royal LePage. In today's episode, let's dive into the nitty-gritty world of closing cost expenses. Whether you're a first-time home buyer or a seasoned real estate investor, understanding closing costs is crucial to making informed financial decisions. So, what exactly are closing costs? In a nutshell, closing costs are the fees and expenses you pay when finalizing a real estate transaction. These costs can vary widely depending on where you're buying, the price of the home, and other factors, but they typically range from 1.5% to 4% of the purchase price. Let's break that down a bit. For example, if you're buying an $800,000 home, your closing costs could be anywhere between $12,000 to $32,000. Quite a range, right? But don't worry, I'll explain what makes up these costs and how you can plan for them. Now, let's talk specifics. Here are some of the most common closing cost expenses you might encounter. One of the largest closing costs is the land transfer tax. And in Toronto, you actually pay this twice. Once to the province of Ontario and once to the city of Toronto. For example, on that $800,000 home, your total land transfer tax could be approximately $24,950. That's a significant chunk of your closing costs right there. There is some good news for first-time homebuyers, however, where you can significantly reduce your land transfer tax burden through both provincial and municipal rebates. The province of Ontario offers a rebate of up to $4,000 on the land transfer tax for eligible first-time buyers. To qualify, the buyer must be at least 18 years old, must have not previously owned a home anywhere in the world, and must occupy the purchased property as their primary residence within 9 months of the purchase. This rebate can fully cover the land transfer tax for homes valued up to $368,000, with the buyer responsible for any remaining tax for higher valued properties. In addition to the provincial rebate, the City of Toronto provides a municipal land transfer tax rebate of up to $4,475. The eligibility criteria are similar to those for the provincial rebate, requiring that the property be the buyer's first home and located within the city. For homes priced around $400,000, this rebate can cover the municipal land transfer tax in full, with the buyer paying any excess tax on higher priced properties. To illustrate, consider a first-time home buyer purchasing a $500,000 home in Toronto. The provincial land transfer tax would be $6,475, from which $4,000 would be deducted, leaving $2,475 payable. Concurrently, the municipal land transfer tax would also be $6,475, from which $4,475 will be deducted, leaving $2,000 payable. Therefore, after applying both rebates, the land transfer tax payable would be only $4,475. These rebates collectively ease the financial burden on first-time homebuyers, making it more feasible to enter the housing market in Toronto. The next expense we'll look at will be the need for a lawyer or notary to handle the legal aspects of the transaction. Legal fees in Toronto can range from $1,000 to $2,500, plus additional disbursements for things like title searches and registration fees. Do your research to find a lawyer. There are some law practices who will come to your home to have you sign the paperwork, and others will send the documents online for you to sign. What exactly is a lawyer doing for you? Well, they play a crucial role in safeguarding a buyer's interest throughout the home buying process. They begin by meticulously reviewing the purchase agreement to ensure its fairness and accuracy, paying close attention to clauses that may impact the buyer. Conducting a comprehensive title search is another pivotal task that the lawyer does. This is where the lawyer verifies the seller's clear ownership of the property and identifies any potential legal issues, such as liens or encumbrances, that could affect the buyer's ownership. The lawyer also handles the preparation, review, and explanation of all legal documents involved, including deeds, mortgage agreements, and closing statements. Throughout the process, they provide legal counsel on matters like zoning regulations, property taxes, and any legal implications associated with the property. During the closing, the lawyer ensures all documents are properly executed and funds are transferred accurately. Their involvement continues post-closing, ensuring the proper recording of the deed and completion of any necessary follow-up tasks. Ultimately, having a lawyer on hand ensures that the buyer navigates the complexities of the home buying process with legal expertise and protection. Another cost to consider in the closing process are reimbursements. When a seller has already paid expenses like property taxes or utilities for a period that extends beyond the closing date, it's standard practice for the buyer to reimburse them for the portion that applies after they take possession of the property. Property taxes in Toronto are typically paid in installments, or the seller could opt to pay it out in full for the year. During the closing process, the buyer would reimburse the seller for the portion of the property taxes that covered the time after the closing date. This reimbursement ensures that the buyer takes on the responsibility for the taxes from the moment they become the legal owner. Similarly, utilities such as water, electricity, and gas may also be prepaid by the seller. The buyer would reimburse the seller for the utilities used beyond the closing date. This ensures a fair transfer of financial responsibility and avoids any overlap where both parties may be paying for the same period. When I purchased my first property in Innisfil, I had no idea that I'd be responsible for reimbursing the seller for their property taxes they had paid for the year. I closed on the property in September, so I had to reimburse for the months of September to December. I didn't budget for this, but I was grateful I had some money that I could use to pay for it. To facilitate these reimbursements, adjustments are made at closing. The lawyer handling the transaction calculates the exact amounts owed based on the closing date and ensures that both parties are fairly compensated. These adjustments are detailed in the closing statement, which outlines all financial transactions related to the property transfer. Another closing cost expense is the cost of a home inspection. This inspection ensures the property is in good condition and can cost anywhere from $300 to $600. An appraisal, often required by the lender to determine the property's value, usually costs between $300 and $500. Title insurance protects you and the lender from potential legal issues related to the property's title, costing around $250 to $400. Property insurance, which you'll need from the day you take possession of the home, can vary widely, but a typical annual premium might be around $800 to $1,200. If you're buying a new home, you might need to pay HST, though some rebates are available. Now that we've covered what closing costs are and what they typically include, let's talk about some strategies to manage and potentially reduce these expenses. Different lenders have different fees, so shop around to find the best deal. Look for rebates and programs such as first-time homebuyers tax credits, which can provide some financial relief. The best strategy is to start saving for closing costs as soon as you begin thinking about buying a home. This way, you'll be prepared when the time comes. As we wrap up today's episode, let's look at some key takeaways. Closing costs. Fees and expenses when buying a home typically range from 1.5% to 4% of the purchase price. The key components: land transfer tax, significant, especially in places like Toronto; legal fees cover lawyer services and document handling; reimbursements, buyer pays seller for prepaid expenses like property taxes and utilities. Other costs include inspections, appraisals, title assurance, and potentially HST. Don't forget first-time homebuyer benefits. You may be eligible for tax rebates, reducing upfront costs. Then there's strategies to manage costs. Start saving early and budget for closing costs. Compare lenders for competitive fees. Utilize available rebates and programs to lessen financial impact. Remember, buying a home is one of the most significant decisions you'll ever make. So take your time, do your research, and trust your instincts. Thank you for joining me today. If you found this podcast valuable, please follow, subscribe, leave a review, and share Charmaine's Real Estate Chronicles with others contemplating the exciting journey of home ownership. You can also follow me on Facebook at Charmaine Goodridge Real Estate, on Instagram at char2427e, or visit my website, charmainegoodridge.royallepage.ca. Your path to successful real estate journey is a unique chronicle, and I'm thrilled to guide you through every chapter.